Good morning, trading family. Grab your coffee and sit down. We have got a morning for you. Everything today connects. Iran, oil, the inflation print, bonds, Beijing, chips. One knot, five consequences. Pull any thread and the whole thing moves.
One sentence before we go in, figure out which thread you're holding. They all lead to the same place.
All right. The number is in. Consumer Price Index. The CPI came in at 3.8% for April. Highest reading since May 23. Beat expectations. But let's talk about what 3.8 actually feels like before we get to Fed policy. Ground beef hit an all-time high this month. Gasoline is up 28% year over year. That is at the pump. It is at the dinner table. And it's getting worse. Wheat is up 40% because fertilizer shipments are blocked by the war.
The bond market heard that print. The 10-year Treasury is sitting at 4.46% right now. The 30-year is above 5. We are 4 basis points from where the math on a 45 times forward multiple stops working.
45 times earnings has zero margin of error.
None. And the rate odds have shifted. Prediction markets are now pricing a 53% chance of a rate hike by July 27. That is a meaningful change.
Jamie Dimon put out a statement this morning, quoting here, "Too much exuberance in markets." The inflation print wasn't good. When that man says those words, you listen.
And Kevin Warsh was confirmed to the Fed board this morning, 51-45. The procedural vote for chair could happen today. The man who might be running the Federal Reserve by next week just watched a 3.8% CPI print on his first morning in the building.
Quick note before we move on. TB?
Ready. Quick reminder, nothing we say here is financial advice. We're two guys talking markets, not telling you what to buy. Do your own research. Every single time.
We called this. 3 weeks ago, we laid out the oil pipeline thesis. March oil at $100 shows up in April, CPI. It showed up. May and June already have full months of $100 plus oil baked in. This does not get better next month. It gets worse before it gets better.
The sequence has been consistent. Energy hits food hits services. The lag keeps running.
All right. Here's where it gets wild. Jensen Huang is on Air Force One right now. Let that land. The chief executive of the most important chip company on Earth is flying to Beijing with Trump to meet Xi Jinping. And it's not just Jensen. The Qualcomm chief executive, the Micron chief executive, Apple, Exxon, Meta, all on the same plane. The agenda is trade, not Iran.
The options market noticed. There's significant institutional positioning in NVDA ahead of earnings and the Beijing meeting.
Somebody is pricing in chip restriction relief. 6 days until earnings?
Here's where I pump the brakes. Micron's chief executive is on that plane. Reuters confirmed this morning that Micron is simultaneously exiting Chinese servers. Same company. 2 realities.
2 realities?
The chief executive is in Beijing negotiating access to that market. The business is already pulling out of it. Which one tells you the truth?
But think about what restriction easing would actually mean. China's been blocked from the top-end chips. You open even part of that back up. What does that do to NVIDIA guidance?
It's significant. Revenue that's currently locked out doesn't come back small. Still, don't know if door 1 is real.
Door 1?
Snape, 2 doors. Door 1, Jensen successfully lobbies to ease the chip export restrictions. NVIDIA gets China revenue back. That's what the options market is pricing. Door 2, the United States artificial intelligence infrastructure has already replaced China as the demand driver. The trip is optics. The China revenue is already priced out. Those are different trades. I am not sure I believe door 1, and I genuinely don't know which door this is.
The options market is saying door 1 loudly. Real institutional money, not retail gambling on a photo op.
Institutional money has been wrong about geopolitical outcomes before, repeatedly.
And they've also been right. I'm not ignoring that signal.
I'm not ignoring it either. I just can't model which outcome we're pricing.
And that is exactly why I have the fun trades, and you have the consistent returns.
The difference between fun and consistent is a very expensive lesson sometimes.
Fair. But here's what I know. Jensen comes home from Beijing and walks straight into an earnings call. 6 days from right now. Whatever happened in that room? Restriction relief, partial progress, nothing. It goes directly into guidance. This is not a quarterly update. It is a geopolitical event with a stock price attached.
If restrictions ease even partially, the guidance revision would be structural. That's a re-rating event, not a quarterly beat.
And if they don't ease?
Then those options expire worthless. And someone had a very bad week.
Let's talk about why oil is staying bid. Reuters confirmed approximately 12 mines in the Strait of Hormuz Island, Iran's main oil export terminal, is at a standstill. Storage is filling because product cannot move safely. Iran is rejecting talks unless preconditions are met. Trump's posture has been clear: deal or decimated. Those two positions don't suggest a fast resolution. Here's your one sentence. Those mines are why CPI is 3.8%. The war isn't abstract anymore. It's in the price of bread. That's the knot.
And even if a ceasefire announcement comes tomorrow, oil doesn't snap back. Mine sweeping, route verification, insurance re-rating. You're looking at weeks minimum. The physical market has disagreed with every peace signal. Every time the headline runs green, the disruption underneath gets worse. Again.
Every single time. The market keeps learning that lesson slowly.
Until Carg Island is moving product, the CPI prints keep coming. Here's my thesis. Nuclear is the answer to a problem that just became urgent. Bloomberg flagged this as a critical story this morning: the race to fuel a nuclear energy comeback. WX Technologies, ticker BWXT. There's an activist campaign pushing for commercial reactor deployment right now. This is not a fringe idea. Institutional money is getting serious about the timeline.
BWXT is real infrastructure hardware. Not a meme. Someone who actually makes reactor components.
Elizabeth Warren sent a letter this week targeting Amazon, Google, Microsoft, and Meta, the 4 biggest data center builders. Each data center they're building uses electricity equivalent to what 100,000 households consume. That's a grid-scale problem. Regulation risk and artificial intelligence demand are about to collide.
She can send all the letters she wants. Artificial intelligence demand doesn't slow down because someone in Washington is upset about the electricity bill.
That's exactly the point. She can't stop the build-out, but she might try to regulate how it gets powered. That changes which energy names win. Oracle confirmed a roughly $20 billion artificial intelligence cloud computing agreement with Meta for training and deploying artificial intelligence models. That is not a courtesy arrangement. That is the physical infrastructure of artificial intelligence getting locked in at scale. The demand the deal represents can only be satisfied by one energy source at this level: nuclear. That's the connect between all 3 stories.
Chips need compute. Compute needs power. Power needs nuclear. Got it.
And here's where my book sits. Wave Trader is running 11 positions right now. Wolf Speed, ticker WOLF, is carrying the book up 20%. That is the thesis working. But my uranium names are getting hit. Energy Fuels has been one of the stronger uranium plays lately, up double digits over the past month. Though uranium names broadly are under pressure from the CPI print today. Same war sending oil to $100 is crushing Iranian uranium demand. That's dragging the whole complex. Domestic nuclear demand is the opposite side of that trade. Real tension in the book right now.
2 sides of the same war. Oil up, uranium down, and both connected to the same place on the map.
Exactly.
Quick stat before we move on. Anthropic just closed a funding round at a valuation above $900 billion, higher than Alibaba and Tencent combined. Just sit with that number for a second.
The artificial intelligence capital cycle is accelerating even while artificial intelligence stocks are struggling. That is the K economy Larry Fink warned about this morning. The gap between the artificial intelligence haves and have-nots is widening. Not gradually. It's a wedge.
As a trader, TFT is sitting at 81% cash right now. Amazon, ticker AMZN, and Broadcom, ticker AVGO, are underwater. Small Cisco, ticker CSCO, position is working. In a 3.8% CPI world, the system is waiting. And I think that's the right call.
Cash is not a mistake in this environment. Patience is the position.
All right, forward calendar. Tonight we have two big prints. Cisco reports tonight. I entered at $91.98. It's trading at $99.29 right now. Small position, but it's live. TB, what's the read on Cisco tonight?
Revenue guidance and margin commentary. The enterprise networking upgrade cycle is what this print needs to confirm. If they call out artificial intelligence networking demand specifically, that's the number to watch. Guidance softens. That matters.
The other one tonight is Alibaba, ticker ABA. Trump is physically in Beijing while Alibaba reports earnings. That is not just a quarterly print. If the summit signals are positive, this gets read as a China recovery trade. If Beijing is already going sideways, completely different stock. Same earnings number, different context.
Two different risk pictures depending on what comes out of a room in Beijing today. I'd wait for those summit headlines before sizing in.
Thursday is loaded. Applied Materials, ticker AMAT, after hours. That is your semiconductor equipment read through for the entire artificial intelligence hardware story. What does demand look like at the equipment level? That tells you where the supply chain is 6 months out.
Applied Materials guides up. The artificial intelligence hardware build-out is real at the manufacturing level. Softens. Yellow flag for the whole complex. That's the number I'm watching most carefully on Thursday.
And then Thursday, we get earnings from two companies. The VC world is watching closely. Both FIGMA and KLARNA report Q1 2026. Earnings Wednesday after close. FIGMA guiding roughly $315 to $307 million in revenue, and KLARNA continuing to grow its buy now pay later business as a newly public stock.
Both earnings will tell you about market appetite for growth stories in this environment.
And then 6 days. NVDA earnings. Jensen comes home from Beijing and walks into that call. I have said it 3 times today. Geopolitical event with a stock price attached. 6 days from right now.
Here's what we're watching. CSCO tonight. If enterprise guidance is clean and artificial intelligence networking gets called out, that position has room above $100. Alibaba tonight. Read it through the Beijing lens, not just the quarter. Applied Materials, Thursday after hours, the number that confirms or flags the artificial intelligence hardware build-out at the equipment level. And the FIGMA and KLARNA earnings are the VC barometer for growth appetite in this rate environment. Every thread we pulled today leads back to the same knot. CPI, oil, chips, China. It's all one trade right now. Figure out which thread you're holding.
That's our show for Wednesday, May 13th. Don't trade the noise. Trade the knot. We'll see you tomorrow on the trading floor.